following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the March 21st Magical Monday edition of today's Trader's Edge show. I'm Rhodes TV, Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us today. You and I, we get to go look at the circumstances of these markets, where the bulls and the bears, the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I am here to serve you. So feel free to pick up that phone, dial on in 877-927-6648 internationally, 727-445. Would love to, 445-1044. You need the other four digits in order to make that call. Would love to hear from you. So let's go ahead and get this party started on this magical and magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got a flat market out here. You've got the Dow up 4 points, S&P back 2. About 1.5, really. NASDAQ up 1.5. Russell is down 4 points. So a little weakness in the week indice out here. The DAX managed to close down its session today off 2 points. The FTSE down 5. Flat across. We could go water skiing on this kind of a market out here. Barefoot water skiing nonetheless. Goldilocks little bump out there. There's a wave. $10 to the downside. That's trading out at $12.44. Silver's up 3 pennies. That's trading at $15.85. Light sweet crude, that is up 24 cents at $41.38. The largest movers dollar-wise here to the upside today, you've got the GW Pharma up $8. IHS Inc. up $8. Regeneron Pharmaceutical up $8, Illumina up 6. Of course, that says that you got Biogen. It says the IBB is trading to the upside here this afternoon. To the downside, Amazon's off about $5. Buffalo Wild Wings down about 5. Credit Acceptance Corp always seems to be in the red. That is trading out at 193. It's down $4. So where do we begin? I haven't been with you since Tuesday afternoon, right? But it was near Wednesday, Thursday, and Friday out here. Some fireworks, clearly, with regard to the Fed out there. But let's just go take a look. So what does all this mean? What does it all add up to? Or what's really going on inside the markets? Let's go look at really levels to be watching for as far as support and resistance is concerned. I think that's probably the easiest thing for us to do. And we can look at a couple different intraday charts out here. Let's begin by looking at the for equity futures contracts out here. Let's look at the 5-hour energy drink chart out here. Let's look at the 300-minute chart for the NQ. That's the upper left. The ES Mini, the S&P futures, that is the upper right. Bottom left is the Dow. And you know, it really has here for us a pretty good line of demarcation where the resistance zone is. Inside the NQ, we'll go ahead and we'll blow this up on the screen. I hope you're watching this on TigerTV out here. Whether it's your mobile device or your computer or the archive, doesn't matter. We can see that what has held the NQ in check at this stage of the game, nothing here looks bearish, by the way. You can see these white horizontal lines going across our screen. They're the 5-hour TAS market profiles, each forming at higher highs with higher lows, higher highs out there. And resistance, though, as we speak right now, is at the price point of 44.07. We'll call it 44.08. Any close above 44.08 says you start to move to the next level. Where's that next level? This doesn't tell us where that next level is, but just says here, support ought to be at, we didn't cover that, but support ought to be at 43.70. Resistance is up here at the 44.07 area. Up until then, you're really in a trading range, and that happens to be your range. If we go take a look at the ES Mini range out here is anywhere between the level of 2043 is what we'll call it, to the upside, to the downside, 2030. So you got about a 13-point range out here. Right now, you're trading out at 2038. At least the way things are trading at the moment, looks like we ought to see another test of that 2042-ish, 2043 level. Any close above 2043, that would be a continuous bullish message out here, but nothing bearish as we take a look at that chart. It's really up to the Dow. The Dow is trading right into the resistance zone. That happens to be out at a price level of 17,505. You are trading at 17,508. Now, this 5-hour chart here does not complete until 2 p.m. So intra-session, we can have spikes as we did between 4 and 9 o'clock in the morning earlier. But still, the essence of price truly is the body of that candle. So and now any close inside the Dow futures contract, I'm not talking about $1 out here. And I don't know what the exact number is, but it's not $1 or $2 out here. But any close above 1705, I suggest that price continues to move up to the next level. Again, this does not help us to identify where those next levels would be. If we look at the daily contracts out here, the daily contracts have both weekly and daily market profiles. These are for the current contract. This is for the June contract out here, and some of these profiles are maybe a bit iffy, but let's just go ahead and use them. In the case of the Dow, we were talking about that 17,505 level. We can see that the weekly point of control is at 17,535. So the key number here, we'll say, inside the Dow is going to be on the futures contract. It's going to be 17,535, about another 20 points above where the Dow is trading right now. If you get above that level, that says that price inside the Dow anticipate a move to 17,735. Inside the ES Mini, that happens to be on this chart here in the upper left-hand corner, any move above the 2046 level says price ought to make another move of about 45 points higher, get up into the 2096 type range. Inside the NASDAQ, the key level of resistance here is about 45.08. So it needs to clear this 44.14 level, and boom, you're off to the races. Now, that does not mean that prices are just simply going to go higher out here, but we are looking at the and really we should talk about where can prices go to the downside, because in that 5-hour chart, we identified that trading range out here. And if prices begin to fall, then where would they move down to? In here, I would probably need to, let me just do this real quickly. Let me go from the 300 minute probably is good enough. Let me just take a quick peek here, a quick gander. So we're using 4370 in the NQ on the 5-hour chart, and the NQ 4384. Yeah. So I'll go back to the daily time frame. And the daily time frame inside the NQ, just to keep that there, would say any move south below the support level that we took a look at would say prices could easily move down to 43.17 and not have anything wrong with it. That might not be the exact number. That's the number I would use right now, but I've got some other numbers that I share with clients out here each day, each morning, so that we know when the market turns from bullish to bearish. Right now, you can't argue. It is absolutely bullish out here. Inside of the ES Mini, if it closes below that 5-hour support level, then you're starting to look at a price move down to about the 1954 range. And inside the Dow, any move lower below that 5-hour level, I don't recall what I know you were writing it down on a pad of paper. You'd be looking at potentially move all the way back to 16,977. Steve Rhodes with TFNN. Dow's up 8, S&P is off 1 full point. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up about 13 points right now. Big movers out here. S&P is off a half a point. So we've got an idea with regard to places to look for as far as where battles are going on and identify where the next moves might be. We didn't really project. Well, we did use we used our market profiles to project where price could move to. So what else should we really look at out here in a market that's not moving a whole lot? Probably many of you out there are asking that question, because I did see when I got back late last night a number of emails asking, hey, what were my thoughts about gold and silver. Nothing has changed there. You saw that if we take a look at what really took place here, from my perspective, to keep things in perspective out here, we'll just simply go ahead and put a weekly chart up on my screen. And so if we take a look at the weekly chart here for gold, I'll go ahead and blow it up just a tad out here. Here's the week. Here's last week. In the case of gold, it opened at 1251, and it closed at 1254. There was no movement. There was no, there was a lot of emotional movement out there, but the reality was there was no movement in the price of gold from really, from Tuesday when we were talking, or Monday when we were talking, or the prior Friday and the prior Thursday, and so on and so forth. So, and really, if you take a look at the prior week as well, just some emotional aspects out there, but you had really a doji, had an open inside of gold at 1260.50 and a close at 1259.40. You had a $1 movement out here. So, is gold going to get crushed? Yeah, absolutely. And you can see here, it's absolutely stalled here the last couple of weeks. So I have no different outlook whatsoever with regard to what gold was doing. Hey, big day with regard to the response to what's her name out there yelling? Yeah, sure. But, traders really came back to reality out here and said, hey, maybe not so fast. So that's what's going on. If we take a look at silver, let's go see what silver is doing. It's really gold where the clear message is coming from out here. We saw a bit more movement inside of silver out here, but my opinion is it's really It's really gold that is going to be the one that's going to be leading silver with regard to its next direction to the south. Now, with regard to light sweet crude, trade out at 41.40. It's had this nice, continuous, gradual move here. It has run into resistance. So the real key level, and you and I had identified this area last week, which is 42.53. We were calling for about the 43 level out here. So we're really in that range. You got up to a high last week of 42.49. So we can see that area has acted as resistance. Is there anything bearish about the setup out here? No. This may just really be a tight trading range for a while. 42.53, maybe even down to a level of about $39. That's not much of a trading range inside of light sweet crude out here. I didn't get a chance to update a number of charts with regard to correlations, but it's only gone for 3 days basically out here. So we know that you've got that directional correlation between the closing price of light sweet crude and the S&P 500 out here. With regard to currencies, if we take a look at currency pairs out here, if we go look at the euro versus the U.S. dollar, go see what it has been doing. Now, this is the weekly chart that we've got up on our screen here. Let's go change this to the daily. That might just be a little bit easier just at this moment here, just to get a feel for what's going on. So I've got a mark out here. I don't know why I do, but I've got a mark at the 113.51 level. That is, what the heck is that? That's really a great question. I don't know. I don't really know what that is, so I'm just going to delete it altogether. Not that it's a bad level of resistance, but I don't know what I've had out there. So you've had a 100% move of a move in the case of the euro getting back into the February 11th swing point. So at this stage here, until it takes out that high, which is, I'll tell you what it is, until it takes out the high from the trading day of February 11th, which is 113.76, we could have a trading range from this area here that we're in the 113s-ish down to about the 109 type area. If we look at, somebody asked about the GDX, I believe it was. Let me go back here. Steve, GDX. So if we go take a look at the GDX as an example, that was Danny in Atlanta. I don't have much. So let's take a look at the weekly time frame. Right, we were looking at gold, so let's go take a look at the weekly time frame here for the GDX, see what it did. A little bit better response, right, with regard to the mining equities versus gold. The prior week, we had a nice little doji candle out here. Price moved a tad higher. The open, by the way, last week was $20.15. The close was $20.61. So you had about a 40-cent move out there during the week. A lot of extreme emotions out here. But when all was said and done, what do we have here inside of the GDX? You've got basically what looks like a line of showers, a line of resistance out here. Hasn't really gotten to it. It's dealing here with the swing point in the the week that began May 11th time frame. But you can see this wide-ranging bar right here that began on March the 2nd, which was dealing with this swing point out here from January 19th. So the miners have had nice runs out here. The question is going to be, as gold continues to move lower, as it continues to get crushed out there, is how are these mining equities going to hold up? And I don't know. What that it appears to me is they really may be setting up some nice buying opportunities. That's assuming that you've got some light volume as those markets pull back out here. But is it going to really, with regard to resistance here inside the GDX, you've got really daily TAS market profile levels out here. That's at 2116. That's by the way, that is a brand new profile. Looks like, let me put the daily. I can't say that for sure, but I think I can. A little strange, yeah. So today is a brand new market profile inside the GDX, and that establishes our buyers and sellers. Sellers are camped out at 2116. Buyers are camped out at 1912. This little box here tips its hat to the sellers out here. You've got that point of control closer to the resistance line. So that's what I would be watching for, those price levels. Again, 2116 to the high out there. Danny, I hope that answers your question. But if not, go ahead and post something else inside the den, and I'll go ahead and get to that as well. So currency-wise, I don't know what else. We've looked at hard currencies out here. If we looked at the euro. Let's see what's going on inside the Japanese yen out here. Just a real trading range. Again, a daily chart right now that is populated on my screen. Just truly been trading between the 115 level, less than 115, to the 111 area, and that's where we are trading at right now. So nothing truly on a daily time frame to be gleaned out of this currency pair. Let's go take a look at Apple. You got Apple is out, I believe, soon. Maybe they're already started to unveil their new products, whatever that might be, or whatever it is that Apple is going to do. We saw Apple begin moving higher last week. We saw some volume come into it as it was taking out a B point. I don't know how it actually ended. Let's go see. Now, the B point that we were looking at was the trading day of March the 4th. There was volume there of what? What was the volume? Why don't I have it on my screen? It is because I don't have that little box checked. That's why. Now, if we take a look at it, you've got the volume back here. That's right. It was 46 million shares. I believe we were taking that out with light volume. It was 40 million shares, which is not too bad. We'll round it up to 41 million out here. Apple could easily, if it gets above 106.64, is that the level? Yeah, 106.64. It could make a run to 110. Now let's talk about Apple when we get back from this break. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. folks, Dow's up 39 points right now. S&P is up 2. Let's go to Earl from Norfolk, Virginia, I'm going to guess out here. Earl, thanks for calling. Thanks for holding. How are you doing this afternoon?
Yeah, hi, Steve. Thank you for taking my call. Steve, I'm looking for an entry point on Smith & Wesson Holdings Corporation, SWHC.
So you're not in this trade right now. And what's the time? When you're looking for an entry point, and that entry point is going to be based upon a trade that you're going to hold for how long? Are you a long term? Tell me what you're thinking.
Yeah, I'm looking for probably about a 3-month hold on that one, Steve.
3-month hold. Well, if we take a look at Smith & Wesson here, it's had a heck of a nice run here. Let me see where we're trading. You are at all-time highs out here. Nothing wrong with that. So there's really no real resistance. At least I've got a monthly chart up on my screen. By the way, folks, it went ahead and it cleared the 2007 high, much like our market did. Now in 2007, up at that high, Earl, this did 17.5 million shares, and as it cleared that level last month, it did it with 33 million shares. So you've got a nice move there on a longer-term chart, because you're looking at a 3-month. We'll call that an intermediate-term basis out here. Let me see what kind of pattern it has completed here with regard to our little lightning bolt measurement tool. And it looks to me like the next target area for Smith & Wesson is going to be in about the $33.28 range. It's trading at $29.62. So I'd say $33.28 becomes your next target for Smith & Wesson. Now, it has had an extraordinarily nice move here off of the lows from January 20th. And you probably know that out here. Have you been watching Smith & Wesson for a long time? Is there something fundamental about the equity as far as what you're trying to look at here, Earl?
No, it's Steve. I had been thinking about getting into it for some time. Of course, I missed that big run-up, just like you said, and I don't know if it's too late to get in or the best way to play it now to get into it. So I guess I'm looking for, like I say, for an entry point, Steve, at this time.
So one thing, when equities start running like Smith & Wesson has, the only thing that ever causes me concern is when it starts running without the appropriate momentum behind it. And that's what Smith & Wesson has really done at this stage as it has moved up off of that January 20th level. Now, if you're watching us on Tiger TV, one of the best tools for identifying tops and bottoms in anything on any time frame is when price is moving to the upside, doing a less relative strength out there, or it's moving to the downside with less relative weakness. Then you're just simply waiting for a signal that it may be time that it's going to go ahead and take a rest. Well, on Friday, inside of Smith & Wesson, as it was moving higher with less relative strength out here, it did create what's referred to as a bearish reversal signal, the shooting star. It's the opposite of the hammer candle. So what that tells us, Earl, is the cavalry, the shooters out here in this stock of Smith & Wesson, they're hanging out at those highs. So the next breakout, if it were to occur to get to that level that we took a look at earlier on the weekly chart, you need to see it close above 30.44. What you're really looking for at this stage of the game, though, even though that's a bearish signal, we're not getting any kind of confirmation here today. What you'd like to see is you'd like to see this thing get below the price point of 28.34 to be exact, and then you want to see it get to 27.96. And if it does that, Earl, then I would say your entry point into this stock, this is Smith & Wesson, SWHC, would be at the price level between 20.56 and 25.30. Probably more likely it's the 25.30 level out there that you would be taking a look at. So there was a signal, it occurred on Friday, that suggested that this thing may pull back. If you see it close above Friday's high, that just simply says it's moving higher. And because it's doing it with this stretched rubber band and doesn't have the real conviction behind it, I would say you just, since your hands have been in the pockets, so to speak, at this stage, I would keep them there and I would be looking for a retracement. But those are the levels that I've been looking for to get in on Smith & Wesson, somewhere between $25.30 to as much as $20.56 on that. Does that help you?
Yes, that's great feedback, Steve. I really appreciate it. Thank you very much.
My pleasure. Thanks so much for calling. That was Earl in Norfolk. And, you know, one of the other things we can see here, folks, and this is going to be the iffy part of this trade, is there was certainly huge volume on the trading day, I don't know what it was, March 4th. I know the trading day was March 4th. I don't know what was behind that move. You could call it wide price spread on that trading day. The price didn't close up at its session highs out there, but it was decent price spread. And so this may have a difficult time. The bottom of that candle, by the way, is 25.78. So we were talking about an entry point of around, 25.30. And 25.30 is probably a pretty good entry point into Smith & Wesson, assuming that there's nothing else or there's not volume coming out of this move out here. So again, that was ticker symbol SWHZ. Now, before we went out to Earl, we were talking a little bit about Apple, which is trading out of 106.16. I know that Tim Cook is talking about a 4-inch iPhone and also talking about Sporty Watch. I don't know what Sporty Watch is out there, one of the Spice Girls, I suppose, and a little bit lesser price out here. But if we do take a look at Apple, and I'm going to turn off a couple of things. Let's turn off a few things just to make the stock chart a little bit easier. So let's turn off the A to B equals CD tool. We can go back to that. Let me just turn off this, and let me turn off that, a little of that, and voila. Now, we can see here that you've got a brand new, let me turn off the weekly profile, and you'll be able to see it a little bit better. So you can see a brand new daily market profile. Those are the blue horizontal lines on my screen out here. We can see that profile, which began today, has got a little bit of resistance out here at the 106.90 area. Support inside of Apple is at 103.90. The way that this new box formed today, it doesn't tell you who has control. It's really both sides have control, meaning that that point of control is right in between the top and the bottom of that box out here. So nothing tipping its hands with regard to where Apple wants to move to. We know that the B point of an A to B equals CD was passed with decent volume, not more volume than the swing, but it's not really too bad out here. If Apple can close above, let's take a look at the 106.90 area. Let's go put those weekly numbers back on our screen out here. Then this would say that Apple could make a run all the way up to 119.86 if we just simply go ahead and use our market profiles. So this is a key area for Apple to be trading in because you have your weekly point of control, which is at the 106.64 area. You've got your daily top of the box at 106.90. You can see that this is an important level for it to trade into. Likewise, if in fact Apple is to close below 103.90, that would then suggest to us that you could see Apple pull back. The next level of support would be 104. If it closes below 104, which is both the weekly and the daily bottom of that box out there, then Apple's got some troubles. And those troubles could always then go ahead and send things to the downside. But at this stage of the game, which is kind of interesting with regard to the markets out here, because they too have been running. They have not gotten extended like Earl and I looked at with regard to Smith & Wesson out here. So where they've been pushing higher, they've actually had the appropriate strength behind the moves out here, whereas Smith & Wesson has not. But in the case of Apple, if it closes above these levels, that's a pretty decent run, right? Up to 119. That would put a lot of action Jackson inside of the NQ, inside of the NDX 100. This is Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 23 right now. S&P is up a point. If we take a look at, let's go look at the S&P 500, trading out of 2,051 out here, and get a feel for what it has done. So give me a moment. Let's get rid of those profiles, as they basically are not as significant here. So here's what we know about the S&P 500. If we just simply start with a blank chart out here, one of the things that we could do, trend line wise, if we're going to try to maybe identify, this is a pretty narrow or shallow trend line, but that's possible that here's where price is headed to. This was the trend line here that is more likely what we will be watching for inside of the S&P 500. Now, this is taking us back into from a daily perspective. This is the November 3rd high. By the way, that price point is 2116.48. Then the next level that we would really be touching, and we're using trend lines versus channel lines at the moment, which means we're going to go ahead and use the extreme emotional point. We're going to use the high of the trading session, which is 2104.27 on the day of December the 2nd. So we can see how price has made its way back into this area. We know that from a trend line standpoint that price had broken, this little shorter term trend line just a few days ago, last week, right? And when you're using trend lines, one of the things you want to do is make sure you have these multiple trend lines. When a trend line fails to act as support or resistance, price will go up to that next level out here. If in fact, and so you can see that the S&P 500, let's go ahead and get rid of this shorter term one right down there. If the S&P 500 is able to close above, I'd have to estimate it, let's make it a number, well, let's call it what it is. It's probably around 2057 or so. So we'll call it 2060. If you see it close above 2060, it says price can move all the way back here. Now, one of the things that you should notice, or that we can both notice out here, I'll leave those trend lines. Here inside the S&P 500 was our true double bottom pattern. Because double bottom, why was it a pattern? Because it was in essence a consolidation that failed, right? In order for it to be something to be a double top or double bottom, you have to be able to take out the prior swing point. Well, that's what occurred out here. And that was the February 1st level. That was the high of 1947. Just like when you and I take a look at consolidating patterns just mean that price trades back and forth in between that consolidation. When you break through a consolidation, when you have a confirmed double bottom bottom or double top, your measured move is going to be equal to that consolidating area. So if we take this little square rectangle and we go ahead and we move it up, here, this basically says this is where price is likely to head to. This takes us, by the way, all the way back to the level of December 29th, when price started moving to the downside. Now, price started moving to the downside for really a couple of primary reasons. Number one, you had the unfavorable seasonal cycle. This is totally different than what's really published out there, because they publish it based upon the sell in May, go away, come back on, come back on November 1st out here. And November 1st to April 30th is supposedly the favorable seasonal cycle. I say BS to that, because you and I have got more data that's available to us from the time, I believe it was, who was it that created that, who did that work out there? Harlan but whoever it did, it doesn't matter who did that work. Here's what we know, that come the end of the year, come the end of nearly every year out here, the market typically moves lower. Our market did that, right? Moved lower into January 20th, moved lower into the early February level. So nothing different here. It was just the extent of the move. What really got that roller coaster rolling out here certainly was China. So we ought to go take a look at China. And that just created a bit of a contagion effect out here. But at this stage, price is coming right back. If we're going to teach you to buy a breakdown, or buy a breakout, we would say, let's wait for things to come back. Well, in this case here, what the S&P 500 would be doing if it breaks that little trend line that we looked at, it would go ahead and complete that measured move, which takes it all the way back, oddly enough, to the price level of 2081.56. So if 2060-ish gets broken, you should anticipate a move into that 2081 level. Not that far from its all-time high out here back on July the 20th, which is out at the 21.26 level out here. We'll see if that truly is the breakdown area for the S&P 500. If we look at what else do we want to look? Let me just look at the Wilshire 5000 out here. Let's just go take a look at that. Let's go see what it had out here. Oh, I can't. I've got a really bad tick. Geez, a really bad tick out here. So it doesn't make any sense to look at that. Let's go look at the Dow. Let me go do that. $INDU. I think we have a similar-ish type pattern. Now, what's interesting here is December 29th, right? And the Dow is trading into that December 29th level out here. So the Dow has already made it back, in essence, to where the market broke down. Now, inside the Dow, that price point, by the way, and maybe this is where we get an important message with regard to the markets overall. We get price message at about 17,750. We're at 17,623. Now, the interesting thing here, there's no reason, if in fact price can clear that high of 17,750, we ought to see the Dow get all the way back, in essence, a bit higher, move into about the 17,970-ish type area, and then that could set up one heck of a large. So if we look at the double bottom breakout here inside the Dow, we can see that the Dow itself has exceeded its measured move. Right here, in essence, is the it's maybe just a tad lower than that. There we go. We can see here, if we go ahead and we put that consolidating move, you can see how on Friday, price just got slightly above that level. Remember, those measured moves out here are equal to or greater than. In this case here, we're greater than. In the S&P 500, we haven't gotten to the equal to level. But the Dow has made it all the way back up to that swing point level that the S&P, in essence, is targeting. So we want to go ahead and watch the Dow. If I look at the advanced decline oscillator out here with regard to the Dow, we know we were looking at declining tops out here. We still, in essence, have those declining tops inside of it as prices have been moving higher, but that alone is not an indication. It's still the bulls that are in control here. That oscillator is above zero. That is very bullish out here, so no problem there. If I go back into this main chart, here's what could potentially be setting up out here. We can't rule out that what we've got is just one heck of a really large consolidation inside of the Dow. And that could be what the deal is out here. We'll find out soon enough. But that's a consolidation between 17,871 down to 15,499. So we'll be watching for that. What else could give us a message or a signal out here? Well, that NDX 100, Apple, certainly a big part of it. Well, let's go take a look at the NDX and see what it's doing out here. Weaker, certainly, than the NDX has really just got that A to B equals CD pattern. No double bottom, right? So we got no double bottom to look at. So that way, when the NDX broke above the February 1st, we don't have any kind of measured type move. The only measured move inside of the NDX is that A to B equals CD pattern. And today, tomorrow-ish, it's completing the one-to-one version of that, which gives you a price projection of 44.34. So far, intraday today, we've seen it move up to 44.27. So you've got the Dow getting back to that December 29th area, maybe the top of it. The S&P targeting that level, and the NDX kind of completing a one-to-one A to B equals CD. We're just simply in areas where you've got to be cautioned. And we've seen that over the course of the last couple of days out here. Just small-bodied candles. They tell us that the market is tired. You're probably tired of me saying that. Steve Rhodes with TFNN. We'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We have an email here from Don asking if we could take a look at VXX. He is looking to get in for a short-term trade. Says it's trading $18.94 right now, but thinks it'll go down to $18. So if we take a look at VXX, that happens to be one of the exchange-traded notes, I believe, for the VIX. This is for the this would be a short of the VIX out here. You can see it's traded 1889. We'll go ahead and put that up on our screen here right now. On my other software, I don't have the two current contracts. I couldn't do it during the breakout there. That would freeze up the system to at least do some type of a wave count or price relative strength divergent pattern that we would be able to take a look at, Don. But here's the VXX. We've seen his trading out at 1889. He's targeting, though we can take a look at this, he's targeting just simply from the standpoint the $18 level. Now, it's trading down into a swing point. This was a key reversal trading session, bullish reversal session from December 2nd out here. The low of that session is 1772 and the high is 1882. And you have been as low today as 1888. So this really become right here, if we take a look, if I were to draw an arrow, which I'll do that for us. So we'll make it a red arrow. This is the swing point right here that he would be shooting for and targeting. Since it's a short-term trade, I would say, Don, and it's 2 o'clock in the afternoon, wait for this to get inside that swing point. And maybe look tomorrow, 1882 out here. The reason why we're just taking a look at this, now I'm going to go pull up the contracts out. Let's do what we really should be doing. The VXX is, or should be, I believe it's made up of the two front month contracts for the VIX out here, for the VIX futures. And that's going to be our April and May. April's at the top, May is at the bottom out here. And unfortunately, if we go take a look at where this is trading into, it's below swing points, right? I mean, this is really what it's doing out here. It's below all swing points. And so this is not going to assist us in trying to figure out, are we testing the top or the bottom of a swing point, doing it with more or less volume out here. So it's really, I don't know the type of trader, Don, that you are out here. If for everybody else who would be listening, I would be saying, I don't think I want to have any piece of this action here. If I were a betting man, which I am, I'm betting that we are more closer to a bottom in the VIX. Not that it can't move down, another 80 cents, as Don has pointed out here. But I would actually be looking to the other side of that trade out here. Now, granted, we looked at the market that could continue to squeak up to those levels out there, and I can't discount it. But this is a time to be cautious, in my opinion. This is really a time right now where these markets, something could I don't know what the right word is out here, but something could make these markets at least pull back. There'd be nothing wrong with a decent pullback out here. So on that VIX trade, you've really got to be focused, and I'm sure, Don, that you are, on that April and that May VIX futures contract in order to make your decisions. And because I don't have those on my other system here, I can't do the wave counts easily, and I can't do a couple of jostle is a good word out there. Yeah, there's something that could jostle this market. We are closer to the potential top of a market than we are really to a bottom, which is where you'd really want to be trading the VXX. So, folks, it is Marvelous Monday. And, of course, on Marvelous Monday, that means our polar bear, our resident polar bear here at TFNN, David White. He's going to be up next. Then we've got the Tom O'Brien Show from 3 to 5. Great to be back with you. Hope you're having a great afternoon. And I'll look forward to seeing you on, maybe we'll call it Turnaround Tuesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.